CommBank's just announced the change that they're reducing their fixed rate by 1.2%. We're also seeing a bunch of lenders starting to reduce their variable rates. Let's have a look and see what's actually going on and see why this is actually happening. So recently we've received correspondence from Commonwealth Bank saying that they're reducing their 3-year interest-only fixed rate by 1.2%. Now, that's a huge move. We've seen CBA make huge movements on their 4-year fixed recently, where they went down by 1.6%. But we're starting to see the banks are forecasting that the rates might actually not get as high as what they initially predicted. And we've seen that, as well as other lenders coming out with updated fixed and variable rates. We saw Bank West recently reducing some of their variable rates by another 0.1%, and even some of their fixed rates down to 4.99%. So we're starting to get a good look into where the banks are starting to see where their rates might peak out. We can see, even as we talked about earlier, CommBank has a fixed rate at 4.99. Bank West now a fixed rate at 4.99. Current variable rates that you're getting on the market are around that 3.74. So it gives us a bit of an understanding as to where the market might actually be heading. We've seen Westpac come out saying that they foresee rates are going to peak at that 3.35%. Commonwealth Bank said about that 2.6%. Now, based on those forecasts, if you're getting a variable rate anywhere around that 3.74, on CBA's forecast, if it gets to 2.6%, that means the rates are going to increase by another 0.75, meaning that you're going to be paying around that 4.5% when they peak. As we can see, as per Westpac's forecast, they're saying rates will peak, similar to what CommBank has said. CommBank said around the 2.6, so a little bit of a difference on their forecast, but they say they'll peak and then they'll come back down. Now, if we go off Westpac's forecast at 3.74, plus another sort of 1.5%, you're going to be looking at the low 5s at the variable rate, where we'll peak and then come back down. And that's where the fixed rates are potentially going to make a little bit of a sense, depending on where the market actually lands. And that's the $1 million question. If the forecasts are going to be correct and Commonwealth Bank gets it right with their prediction at 2.6%, or if Westpac's going to have probably a better finger on the pulse and we get closer to that 3.35. We saw recently there was a survey of 20 economists, and of the 20 economists, they averaged out a 3.1% cash rate as their prediction. So CommBank at 2.6, Westpac at 3.35. Even if we say it's somewhere in the middle, that's kind of where these fixed rates are pegged at the moment. The other thing to keep in mind, if you are looking to fix, you're paying 4.99 from day one, rather than the variable rates on the market at the moment, which are anywhere in the 3.7s, 3.5s. So you're paying a premium from the moment you get the fixed rate locked in. Where variable, as you know, you take the risk, you could pay higher, you could pay less, you're going to go up and down with the market. The variable rate gives you a bit more flexibility, where you can have offset accounts, you can make lump sum extra payments, but there's no stability. So as rates might go up again, looking likely in September, they're saying there could be anywhere from a 0.25% to a 0.5% rate rise in September, and then another one in October. The variable rate gives you a lot of fluctuations, up and down with the market. Where you fix, you really lock it in. And this is where, we're seeing the banks are starting to slide backwards. The fixed rates are starting to make a little bit more sense. And doing that analysis and working out where things are going to make more sense for yourself is really important, especially we see there CommBank has a fixed rate for 4 years. If rates are going to peak and then come back down later next year or the year after, locking yourself in at 4.99% for 4 years is starting to maybe have a bit of a changed outlook on where we might be, given that we see Bank West 4.99 for 2 years now. Commonwealth's got a 4.99 for 1 year and 4 year, and some of the bank's outlooks is starting to align, and we're starting to see even other economists look into that and sort of agree. It's all going to depend on how inflation is tamed. We see inflation currently at 6.1%. That's estimated to hit 7.7 or 7.8% in this quarter that we're in at the moment. That's ending in September. So we'll get that data out soon. And it'll be really interesting to see if inflation peaks. They're saying it'll start to come back down. RBA's target band is around that 2 to 3%. They're saying we're going to hit that target band sometime next year. And we've seen a lot of aggressive interest rate hikes to really combat that inflation. The Reserve Bank keeping an eager eye on wage growth, unemployment. So as we see all this sort of play out, we're starting to see some of those fixed rates, which the banks were quite aggressive in offering, which are quite elevated in the fears that rates were going to go up. We're starting to see them unwind. And we can even see here with Westpac's housing report how they've consistently changed their outlook based on the information that prevails. So we can see in February of 2022, so February this year, the bank actually forecast inflation only hitting around that 4% peaking and then coming back down. And they said that was going to peak in June this year. Well, June's come and gone, and obviously inflation's continued. In May, they came back out and they said, actually, no, inflation's going to peak once again in June, around that 5%, and then we might see it peak again early 2023 and hit that sort of 6%. And we can see they've recently in August edition come out and say, hang on a minute, let's revise that. We're going to hit 7.8% and then come back down. So we can see the forecasts are consistently changing as new information comes to light and we start to see what's happening, not only in Australia, but for the rest of the world. We can see America's kind of started to peak. That might come down. The one problem Australia does have is that we only get the data every 3 months. So we fly blind for a lot of the time from the reporting that we get and where we think we might land. And that's why we see here where Westpac's had to change their forecasts a lot of the time. And even with the cash rate, the same thing happened. The bank initially saying, no, the cash rate's going to hit that 1.8, 1.9% in February. Then May, they said, no, hang on a minute, in the 2.5s, 2.2s. And now they're sort of saying 3.35. Definitely will be interesting to see how that plays out. As we can see, unemployment growth is at a record low. Unemployment rate is at a record low. We can see unemployment growth, trending upward. So that's definitely, good signs for the economy. It'll be interesting to see how all this plays out, guys. So if you have any questions, leave a comment below. Love to see what you think.